Welcome to the Facts versus Feelings podcast. I'm your host, Ryan Detrick, and I'm joined by my co-host, Sonu Varghese.
Cutting through the noise in 30 minutes each week with Ryan Detrick, Chief Market Strategist, and Sonu Varghese, VP Global Macro Strategist, taking out the boring and helping investors focus on what really matters. A quick note before we start the show. Investment advisory services offered through CWM LLC, an SEC registered investment advisor. Carson Partners, a division of CWM LLC, is a nationwide partnership of advisors.
All right, Sonu, we're going to do a little pre-discussion of episode 98, Carson's Facts versus Feelings. We were joined by Dani Fava on the Carson team to talk about AI and all the cool stuff that we have. And then part two, that's the first 30 minutes of this conversation. Then we did another 30 minutes kind of talk about markets and kind of your traditional facts versus feelings. Well, we can't give it away, but how fun was that discussion with Dani?
No, that was fantastic, right? I think the main thing with Dani is that she's taking Carson and all of us to that leading edge of AI and how it interacts with finance and everything we do literally on a daily basis, right? And then what's great about about her in this episode more than, but even outside of that is how well she explains stuff like what is AI in the first place, right? How do you think about AI? Should we be scared of AI even? What are the pitfalls of that? But what are the exciting, opportunities in this space related to AI and all of that? So yeah, that was a lot of fun.
It absolutely was. And then again, so we'll talk to Dani for 30 minutes. Then we'll do a regular Facts versus Feelings, talking about the markets for 30 minutes. You've got a full hour podcast this week. Without further ado, we're going to start episode 98. Starts right now. Hi, everyone. Welcome to the latest edition of Carson's Facts versus Feelings with Ryan and Sonu. Sonu, this is a very special one. We've been looking forward to it. Episode 98. We are inching closer to 100 here. Talking about AI with Dani Fava. We are excited to be joined by Dani on our team. Dani, first things first, please give your title and how excited you are to be here.
Sure. Thank you, Ryan. Hi, Sonu. Dani Fava. I am the Chief Strategy Officer here at Carson Group, and I am incredibly excited to be here and fresh off of a vacation to Maine. So I'm really relaxed and talking about my favorite topic here.
Well, I will just say this much. Sonu and I will do our regular Facts versus Feelings, so we're aware lots of stuff is happening. So I've got a timer here. So literally right now, fast forward 30 minutes. I'm not saying do it. In fact, you should not do it. But if someone wanted to hear our stuff and come back exactly 30 minutes from now, I've got the stopwatch going. We're going to talk with Dani about AI. Oh, but before we go there, how was the food in Maine? We like talking about food and stuff. What'd you do in Maine, and how was it, Dani?
I ate a lot of lobster. I ate lobster pretty much every way you could imagine, and a lot of blueberries. And a lot of blueberries for dessert.
Oh, nice.
It was incredible. But we were hiking most of the time. So we were outdoors and just taking in all of nature, beauty, lakes, mountains. Didn't see any bears, which I was hoping for.
Oh, there's no bears. This is a bull market. Any bulls? Do you see any bulls? It's a bull market,
I was wondering if you did any lobster fishing. But
no, we didn't catch any lobsters. We did go whale watching and we saw a shark. But didn't catch any lobsters.
And technically, Sonu's not here either. Technically, Sonu is not here. He's on a sabbatical. Sonu, you did some tennis watching last week. How'd that go? I know you got rained out a little bit in Cincinnati.
Yeah, but Cincinnati is nice. All these smaller events are nice to get up close and personal. So, when I did the Take 5 with you last week, I was just 20 feet away from Carlos Alcaraz. So that was cool. Yeah. And I guess right now the final must have started. Francis Tiafoe versus Yannick Skinner. So I'm a big tennis fan for everyone.
You're missing the finals right now. He's not Dani. He's not even going to pay attention. He's going to have one eye watching this. So okay, you and I will talk. But listen, we're here for a reason. We're going to talk with Dani about AI and all the cool stuff that she's bringing here to Carson Group and how we're going to change this industry, revolutionize things, and help our Carson partners at the end of the day. But Dani, let's start with something a little easy, or maybe not. This will probably take a while too. But tell me a little bit about yourself and your career.
Sure. So I've been in the financial services industry for quite a while. It's coming up on 25 years, I think. Started my career right on Wall Street, lived and worked in New York City on a trade support desk, and basically decided that the systems were too inefficient and needed to be automated. So I kind of focused the rest of my career on automating financial technology. Went from there to work for some smaller startups, then ended up at TD Ameritrade as the director of innovation for our financial advisory business. Spent a decade at TD Ameritrade doing that job. And I would say that's the first time artificial intelligence and machine learning really crossed my desk. And we started to do some amazing, interesting things with that tech. Then spent about 4 years at Envestnet, again, working with independent financial advisors and broker dealers on how to integrate and make their technology as efficient as it could possibly be. And now I'm here at Carson. I've been here for almost 5 months. I think I'm coming up on my 5-month anniversary. Can't believe how fast it's going. And really excited about what Carson's doing with artificial intelligence.
No, that's awesome. I just realized I don't even know where you are right now.
I'm in Westchester, Pennsylvania.
Okay. I didn't know that. I wouldn't have guessed that. But finance is not known for being at the forefront of anything. Traditionally, right? It's stayed and boring. Maybe boring isn't too bad given like the industry, but still, there's a lot of legacy issues, and people don't want to move and try something new. How hard has it been to do innovation, especially on the technology front?
It's a
during
great
your career.
It's a great question, because the thing that we're faced with is it's not a lack of skill. It's not a lack of resources or even funding. What we're faced with is a highly regulated environment, right? So, and that's kind of where innovation stumbles many times. Is that we'll have a great idea or something that we can build that's feasible, and we think will add a ton of efficiency, but you have to have a heightened sense of privacy requirements. You fall under, obviously, certain other regulations when you cross the line on giving advice or making a recommendation. That really has to come from a human being, right? So we, I think in our industry, the reason why it's been so hard to innovate, not impossible, and we have done some incredible innovation, I think, in the space, but it's been so hard because of that regulatory environment, and for good reason, right? We are dealing with people's financial futures, and we want to make sure that everything we do is incredibly well tested and secure. So, no complaints about the regulators, but artificial intelligence is really coming on the scene quite quickly. And I think being embraced by even financial services players, led by some really big names.
So let's maybe start there. I mean, when I hear AI, artificial intelligence, I think lots of things. Obviously, you've been in this industry, you've been a leader in the forefront. When you hear AI, artificial intelligence, what's like your definition? What do you think of, and what should we think of from a, I guess an advisor's point of view when we hear those two words?
It's so artificial intelligence it's really so fun. It's a field of computer science. It's a very old field of computer science, actually. And the concept and probably the first pieces of artificial intelligence were born in the 1950s. And the thing about artificial intelligence is that it's a way to, or it's a system that can perform tasks that are typically required, or you're typically requiring human intelligence, right? So that's what AI is. It's any computer system that can perform a task that typically requires human intelligence. And that includes problem solving, learning, adapting to new information, maybe even mimicking the human cognitive process. That's what artificial intelligence is. But when I say it's a field of computer science, what I mean is that there are so many things inside of artificial intelligence. We've experienced it really front and center with ChatGPT, right? Everybody's heard of ChatGPT. Maybe we'll talk a little bit about that later, but we've all kind of experienced AI, and we're kind of like, that's it. Now I've experienced AI. But that piece of it is really just generative AI. That is, it's text generation. That is just one slice, one vertical within a big field of computer science. That field also contains things like natural language processing. When the Alexa device came out, which is probably a decade ago now, that was a form of artificial intelligence. Natural language processing, or the ability to understand the human language, is a form of artificial intelligence. You're unlocking your phone with your face. Facial recognition is another vertical inside of artificial intelligence. Going back even further to my days at TD Ameritrade, where we were experimenting with artificial intelligence, what we were doing was machine learning. And what we were doing was we were trying to detect fraud or try to predict when a client was going to leave TD Ameritrade, because clients who were about to leave exhibit certain behaviors. So artificial intelligence is like, we could draw a big circle around it and say generative AI is one small piece of it, but it contains a lot of different computer science methods kind of under one big umbrella called AI.
Interesting. On that, that's such a great point that it's been around us for such a long time. And I'm just thinking to we had Kathy Wood on the podcast, and she said like Tesla and robo taxis, again, not a recommendation to buy or sell Tesla, anything like that, but robo taxis, things like that will be a big part of this, AI story. But I was flying on several planes over the last month, and probably Ryan too, for that matter, and you too as well. And we've had autopilot for a long time, but I imagine, if you tell people like, there's no pilot in the cockpit, that would be a little scary for most people flying on the plane, even though I imagine the autopilot can do a lot of things, including landing a plane, if I'm right. I mean, Ron Carson maybe know a lot more about that.
Have you gotten picked up by an autonomous taxi yet?
No, I haven't. And I don't know what I would feel like. And that gets my point. Like, do you think there'll be some resistance from people being a little scared about that? And about AI doing everything that a human is not doing anymore?
Yes. I think we'll certainly experience a lot of skepticism, and like all things, I think with time we will overcome those fears. I have been picked up by an autonomous Uber in the Vegas airport. It gave you the option: do you want this or not? So the companies that are holding this out are aware that some people are just going to reject that out of hand, like let someone else test it. I've got that kind of personality that I want the early experience. I would consider myself an early adopter. And it was scary, but it was also really thrilling, right? So to experience the kind of this kind of innovation and what technology can do is exciting. But for sure, we're going to have a healthy level of skepticism. There's reasons to be skeptical and to be highly regulated in some of these environments.
Yeah, I know, Sonu, you and I talked with spring break. I guess in April, I was out in San Francisco and saw some of those. And we didn't get in one, but you saw them. I was like, oh, wow, my kids thought it was the coolest thing ever. But, as a child of the 80s, I grew up big fan of James Cameron watching Terminator. Now, you know where this is going. The machines took over. Now, of course, this is a playful joke. But at the same time, we're talking about these fears, Dani. And, should we be afraid of AI? Could something like that happen where Skynet takes over? These are things I wonder, and hope not, because I saw how Terminator ended. It wasn't good. What are your thoughts on that front? Or should we just embrace it, like you said?
Yeah. And maybe on a tangent related to that, how far
when I start talking about Terminator, it is a tangent, but I love it. I love believe me, Dani, we love over the top action movies on this podcast, so I had to bring it up. Yeah.
No, I mean, on that, like when you talk artificial intelligence, it's still intelligence, and you think at some point it should replace, let's say maybe me or Brian or yourself, or hopefully not, but in some form or the other, right? There's that famous Turing test, right, where AI can recognize it is like can behave like a human being. How far away from that are we? And then obviously getting to Ryan's tangent.
So there's so many things here. There's so many things here. I'll go and you interrupt me if you want me to go in a different direction. But I'll start with should we be afraid of artificial intelligence or should we embrace it? So I do think we're going to have some fits and starts. We've seen, like with any other technology, there'll always be fraudsters. There'll be nefarious actors who want to use this technology to their benefit, which is, not a good outcome for the general public. Every technology is going to experience that. As a matter of fact, when you think of something simple like bank robberies, right? Bank robberies have become exponential crimes as technology has evolved. You used to have a bank robber who would walk into a bank with a mask and a gun, and it would be this isolated incident of robbing that, one teller at that one desk and taking the money out of the drawer, which was a dangerous situation. And as technology has evolved, a bank heist is now not akin to that robbery. A bank heist is more akin to taking out, a row of ATMs on the east side of Manhattan, right? And it gets exponentially larger as the technology evolves. So as technology evolves in any arena, we're always going to have nefarious actors trying to take advantage of it. So there is There are things that AI enables you to do, that nefarious actors to do, that we can protect ourselves against. And there are things that AI enables or makes more prolific that we should also be aware of. For example, there's a thing called deep fakes. So deep fakes are, I can take our video that we're creating here. We're actually, by being on this podcast, we're increasing our risk a little bit because we're putting ourselves out there on the public, ether on with our image and our voice, which can be now very easily replicated, right? So somebody could take this video and can create, Ryan Detrick saying a recommendation that Ryan Detrick didn't actually say, and it would be so very indistinguishable from yourself and your likeness that people would believe that it was you. Now, what nefarious actors are doing with that technology is that they will call your financial advisor. Ryan, they'll take your image and likeness, they'll call your financial advisor, maybe even do a video conference with your financial advisor and ask to transfer money. Like, hey, I'm at the craps table,
everything
and well, right? So send me a check. And our financial advisors, we've trained our industry to check the authenticity of the clients by getting on the phone with them, right? We've taught them that by getting on video with them. That's how you make sure your client is your client. That no longer holds true. So what do we do now to protect ourselves against those kinds of deep fakes? Well, the answer is actually, it's uniquely human. It's uniquely like human connection. What your deep fake Ryan won't know is that, we just talked about a hike in Maine. So what you won't know, what your bot, I can ask your bot, like, hey, did you ever do that hike? Where did you say you were going? That's the new way to humanly authenticate our clients. What I recommend financial advisors do is actually have a safe word. And I have that with my family. My family and I share a secret word where if, somebody texts or calls even and asks for money, we have a secret word that we share. So advisors can do that with their clients, or they can, have this human connection. And I think it's actually really, it's almost serendipitous that the thing that saves us from these kind of new sophisticated cyber threats, the thing that saves us is the thing that makes us most uniquely human. It's our connection and the things we know about each other. So that's like one way we could say, yeah, yes, be scared, but be aware of the ways in which we can protect ourselves.
It's interesting. There's so much. I just saw on Twitter the other day, but you see everything on Twitter, and for good or worse, right? There's this image of, former President Trump and Vice President Harris walking down a beach. And it's so uncanny, right? But that's fake. I mean, you don't.
Yeah, that one is kind of obvious. I think there'll be things that are less obvious, and there'll be some manipulation. There'll be, at some point in our future, there'll be market manipulation with these kind of deep fakes. And that's not the only threat that AI brings. There's also the proliferation of bias, right? So, and I should probably, before I get into the bias that AI proliferates, I should probably explain a little bit about how AI is built and what makes it different from, say, just a regular computer program or algorithm. So artificial intelligence is built through consuming data and experiences. It is not written as an algorithm. It does not follow a set of rules. So I can't say, hey, if A and B, then your output should be C. That would be a computer program or an algorithm. Artificial intelligence learns through experience or just by consuming data, just consuming raw data and making it's a predictive data analytics is what we call it. It's just making really high level, accurate predictions. And I liken it to the way we know when we step outside of the house in the morning, if it's going to be a sunny day or a rainy day, right? When you go outside, you should go back inside for an umbrella. How do you know that, right? No one has ever sat down and taught you the rules of a rainy day. No one has ever sat down and say, you know what, Sonu, if you walk outside and it's a little gray and there's a chill in the air and there's a certain smell, you should go back and get an umbrella. No one has ever written those rules for you. Instead, however, because you have walked outside on hundreds of rainy days and thousands of sunny days. You have learned through experience how to detect and predict a rainy day, right? You just took in all those experiences day after day, and you got really good at predicting it's going to rain, right? So that's the way artificial intelligence is built. It consumes all of the data you give it, and it creates these amazing predictions on like what is the answer, or what should come next, or where are the threads of similarity. So when you think about bias, all of our data is biased. Why? Because we made it. We made all of our data. We wrote everything. We've made all of these decisions that we've made. Everything that exists about us is biased. So when you train an AI machine using all of the data that we've created, that machine has no choice but to also be biased. So that's the other kind of scary thing for this kind of like wave of artificial intelligence, is that it will continue to carry forward the biases that we've already laid the foundation for, because it is going on kind of using our data and our decision-making skills.
It's very interesting. I mean, I'm going to use a ridiculous example to sort of see, and you can tell me if I'm on the right track or not. I mean, let's say I have a bunch of let's say 10,000 cat pictures, and I have my own computer. I show all these 10,000 cat pictures to my computer and tell it that's a dog. The computer will just believe that's a dog, presumably. Is that that's one way to train it wrong?
Yep. And that if you trained a model that way, then yes, the model would always believe that that's a cat. But your example is really interesting, because that is exactly how artificial intelligence was trained, and using examples just like that. Like, feed it 1,000 pictures of a cat and then give it a picture of a dog and say, is this a cat? And see and it will say, nope, it's not a cat, because I know based on those other 1,000 images you gave me that right. One is not a cat. So that's exactly how artificial intelligence was formed, created, and trained. Now, when I say the concept and the method was built in the 50s. So why are we just seeing now in 2023, when ChatGPT was released, the accessibility of artificial intelligence to every, personal computer? Why did it take so long? And the answer to that question is processing power. Just the processing power didn't exist until very recently for artificial intelligence, generative AI specifically, to be viable and to be accessible at a cost-effective rate, to the American public or the global public.
What's amazing, for 70 years we didn't have it, and then in 2 years suddenly we have it. It just speaks to how exponentially, how exponential changes.
It's like the old saying, how you go bankrupt very slowly and then suddenly. I think that's kind of how AI also is going on. But this is episode 98 of Carson's Facts versus Feelings. Again, we're joined with Dani Fava, and we're talking about AI with Dani Fava. So, Dani, we've got about 10 minutes to go. It's amazing how fast this goes. So many different things we want to talk about. But one of the things, we talked about some worries about AI. Let's talk about some of the exciting things. There's the word generative AI, and just maybe explain that. But what are some of the really cool things that you see happening in the world of generative AI and how it's being used?
Yeah. So generative AI is artificial intelligence that can generate something very much like a human. So it can generate text or music or an image or a video. And actually, we see all of these things. These all exist today. We can create all of these things using generative AI. So generative AI is just creating some output in the way that a human would. We see so many really exciting use cases, such as creating commercials, creating music, generating text, writing books, reviewing books, and copy editing books. We see all of these things kind of happening with the use of generative AI. But where I get really the most excited is sort of the medical advancements and the advancements that will really change the quality of human life. So, for example, you think about how much data we've collected in the medical field through everybody's scans, x-rays, medical records, et cetera. You think about how can this incredible predictive data machine help us? And the possibilities are endless. As a matter of fact, just the other day, I read that a new AI use is that we can detect breast cancer 4 years before it would show up on a scan. So you think about these diseases that we grapple with, things like autism, that we don't know the cause of, but we have all of this data now. Can generative AI, can AI, as a field of science, can it figure out what the common threads are so that we can finally figure out what the cause of things like cancer, autism, and things that are really, set to change the quality of all of our lives.
So I'll jump in real fast, and then someone will go ahead after this. But Ron's talked about this. Ron Carson, our founder and CEO, or no, founder and chairman of the board, sorry, has talked about this. The idea that AI is going to help us. Like if you have a bad heart, it's going to know way before it happens. You just mentioned cancer 4 years before. But how do you know? Do you have to put something inside your body? I mean, how does that work? How would it know if you have high cholesterol all of a sudden? You didn't have it last month. How does that work?
We will get there. I think we actually will get there with implanted technology.
Okay.
We will see that in our lifetimes. We're already seeing that being tested in some cases. But really, it's just these genetic markers that artificial intelligence is picking up that we never knew were there before, right? So let's take some crazy thing like I've got high cholesterol, and I'm a specific age and I live in a specific state, right? Like let's take these three things that are seemingly unrelated, that a doctor would never think or have seen, to put those threads together. When AI is looking at all of this data at one time, it will pick out that thread and say, hey, the thing that everyone who's been diagnosed with ALS, the thing that everyone has in common are these three seemingly unrelated things that you would have never found that thread of commonality just being a human brain. With your limited processing power in the human brain, you could never process all of those data points and be able to find what the commonalities were, but AI can do that. So it's really just the collection and identification of all of this data and our genetic markers that create the scenario where AI can solve these problems.
Wow. It seems like the way we work, humans work, is a lot of it is by pattern matching, for good or worse, right? I mean, maybe it's not the best thing when you're investing, but otherwise, it is. But AI just takes pattern matching to a whole other level.
Well, you bring up a great point, Sonu. As you think about, now that you kind of can wrap your head around how artificial intelligence is making these predictions, think about investing, right? Like think about all of the economic and environmental factors that we look at, that we try to find correlation among. And we are all human brains trying to find that correlation. We're all you guys are incredibly intelligent. I've seen every possible iteration of market movement and company factors that are in the mix. Imagine putting everything you've ever known, ever seen, and all of that data into a machine that's got this kind of capability and processing power, and how that machine can start to predict, what will happen when the Fed speaks, or which stocks will react, and have we seen this in the past, and can we predict at a much higher degree of accuracy, how the market will move. And I actually think that's going to be one of the things in the future that we'll start to. We've been on a journey of market inefficiencies have been narrowing, right? Like it's harder to just find excess return or inside of with market inefficiencies over time. I think AI will contribute to that. And we'll start to. It'll be hard. It'll be harder and harder to find those inefficiencies when AI fully takes hold of financial services.
So let's go there. I know we've got a couple minutes left. I did see you were recently named one of the top 100. Was it female advisors or women advisors by Barron's? Which one was it? And congratulations there.
Thank you very much. Awesome. I'm pretty sure it was women in the financial services industry.
I think so too. Okay. Yeah. But I saw that about a month ago or so, and that's awesome. So let's again, look at the clock. We got about 3-4 minutes. We can go a tad more if we need to, but let's bring this full circle. We have a lot of financial advisors clearly that listen to the Facts versus Feelings podcast. We talk about all these cool things AI is doing. What are some things we're seeing right now, and maybe in the near term, let's say the next year or so, that financial services will be able to use again to help their clients, to just help their clients?
Yeah. So And before I answer that question, let me just say how prolific AI already is in the workplace among knowledge workers. So, ChatGPT has 100 million users worldwide, which active users, and ChatGPT has competitors, right? I'm not even counting the competitors in Google's Bard or now Gemini and Perplexity, things like that. So there's hundreds of millions of people who have used ChatGPT, but what about at work? Like, are people doing this using generative AI at work? And I recently saw a study from Microsoft and LinkedIn that said 78% of knowledge workers are using AI at work, and half of them are smuggling it in, meaning half of them have not been given the AI tools to do their jobs. They're just kind of like, using them without their employers knowing. Half of them. It's an incredible, like it is here, it is among us, people are using it. What are they using it for? Like, and where are the really great, exciting use cases? I would boil it down to one word if I could. It's communication. So the way we communicate to our clients, or what we say to them, how we say it, how we approach them, that's where I think the most use of generative AI is right now in our financial advisors' lives. So can you help me craft an email? What should I talk about today on my blog? Can you summarize this PDF? I just got this, the Fed just spoke, here's what they said, can you help me interpret it? Like, what should I say to my clients about it? Oh, and my clients are typically, 30-year-old tech entrepreneurs. Like our generative AI tools like ChatGPT are sophisticated enough to distill a message, not only to summarize a message, but to summarize it in the context that a 30-year-old tech entrepreneur would want to read. So the most exciting use cases are all around that kind of efficiency around communication. We're going to see a lot of different use cases. We already are, but that one I think is the most prolific and probably the most profound in terms of our industry.
So last question, you're bringing a lot of this to Carson. Can you give any of it away to the listeners, or what's how excited are you about the things you're going to bring here to the Carson ecosystem to help our partners?
So we are going to be making some investments and doing some really exciting innovation around generative AI, and we'll be telling our Carson partners about a lot of that at our Excel conference, which I'm excited to see you guys at next month. I can't give too much of it away. I can only say I cannot wait to do a little show and tell with our partners and start to talk about that a little more publicly.
So we are at about 30 minutes. Last one. You've been with Carson 5 months now, and by the way, stocks have gone up a lot those 5 months, so thank you for that. If there's an advisor out there listening and they're not happy where they are and they're kind of stuck in a rut, what have you seen with your brand new eyes to Carson the last 5 months? Why should an advisor want to join up with Carson so we can help them grow?
Yeah, and not to be say it again, but artificial intelligence is a tipping point in our industry. I think it's going to make advisors a lot more efficient, but they're going to be faced with a lot of challenges in terms of what's the right AI to use, what's the right use case, how do I do it, how do I keep myself and my clients safe while I do it. And Carson, we really have a foothold and a focus here. And being here with us and on this journey with us is the right place to be. We've got a community of innovative advisors who are on this journey with us, and we're all about growing that community and accepting others into the fold and helping them through this innovation process.
That's
I
awesome.
love it.
We have 30 seconds, actually 10 seconds. You mentioned a bunch of AI tools. I'm just out of curiosity, I don't even know if you're allowed to answer this, but I'll try anyway. What's your favorite AI tool?
Oh my goodness. I probably can't say, but I will say this. I will give an alternate to ChatGPT and say Perplexity. Okay. Perplexity has always kind of been my favorite generative AI research tool, because Perplexity gives you source data, right? So it's telling you, here's the answer, here's the research I've done, and here's where you can go click and get that source data. And that Perplexity has just been amazing for me. So, and I've been following
that because I use that as well.
Yeah. They're great. They're that's an awesome one.
Well, this whole conversation was awesome, Dani. Thank you so much for joining us. We're excited to hear more from you over the coming many years of the different ways that you're going to push the boundaries and push the limits of what people think is possible, and to continue to help our industry and help our Carson partners. This was a lot of fun. At this point, we're going to say goodbye, and Sonu and I are going to take a break, and we're going to come back and do a regular facts versus feelings and talk about the Fed and interest rates and all that stuff. But I think this was more interesting for sure. But thank you, Dani. Any final comments, Dani? You can bring us home.
No, thank you so much, guys. It's been a pleasure. I love listening to you. Thanks for having me on your podcast, and I hope to have me back sometime. We can keep talking about this.
Absolutely.
Sure. Thank you.
Round 2 starts right now. And we're back, Sonu. Doing this a little bit later than we just switched. I'm wearing the same shirt for the YouTube channel just because I thought, even though it's a day later. What are you wearing?
Did you get a haircut?
Well, I did last week. Not since this. I told them my kids, they go to these barbers that they like. My wife likes them. They said go in there. I said okay. I told them what to do, and they cut my hair, I think, too short on top. I wanted the side short, the top a little longer. But we'll get there. But I did get a haircut. Yeah. So
look good.
Yeah. Well, thank you. Thank you very much. Thanks for lying to me. It was actually like a $35 haircut, which is cheaper than some that I get at other places. So you know what?
Okay.
I'll take it. I'm trying to save places. So
did they give you a head massage and stuff?
No,
or no?
This is a barber. They don't. My other place does things like that. Ooh, that is nice. But
that is nice. Yes.
Yeah. My wife and I. Oh, go ahead.
No, I was just saying, when I get by then I'm half asleep.
Oh, you're not kidding. Yeah, my wife and I met. So you and I are recording this on the 20th, which is Tuesday. My wife and I met 20 years ago today. 20 years
congratulations.
ago today. Well,
wow.
Ask her that, and she'll let you know. Anyway, so last week for a couple days, she and I went to Hawking Hills, up in the kind of the hills of Ohio, to a nice little. I wouldn't call it bed and breakfast. It was nicer than that. I mean, we got a couple's massage, had 2 really nice, home cooked farm to table meals.
Nice.
It was just a really, really nice time. And anyway, I don't know. Oh, where I was going with this. That's what it was. We were getting couples massages. So that means you're in the same room. My wife said multiple times I start snoring. She's like, Ryan, it's just so relaxing. Yeah.
I know.
After all the last, just think of 2 weeks ago, right? So this is why and again, thanks to Dani for joining us there in the first 30 minutes of this podcast. We're going to keep this one probably about 30 minutes, and we weren't even really necessarily planning on talking markets, but with everything that's gone on, that's what we're kind of doing. Yeah, that's how we were doing part 2, if you will, of episode 98, talking AI with Dani Fava. But this is obviously the markets part. Just think about how far we've come. So just 2 weeks ago, right now, think about what you were doing 2 weeks ago, right now, including me. In your wildest dreams, would you say we're looking at the longest win streak potentially in 20 years? If the S&P's green today, we'll see. But that'd be 9 in a row, longest win streak in 20 years. Nobody, and we were fairly bullish. Nobody thought that. Just how big a swing is this in 2 weeks, you think?
Look, and 2 weeks ago, I'm trying to think back what I was doing. No, 2 weeks ago, I was flying back from London to Chicago.
That's true.
And the day before that was when I joined you and Barry, our colleague, on our macro Monday morning AM call, and things were, the S&P fell 3% that day. That was a drop. And since then, 2 weeks later, the S&P 500 is up 7%, right? It's almost fully recovered. It's just less than 1% off its high that it gained on July 16th. And we've talked about stuff we probably never wanted to be talking about, like yen carry trade and things like that. But look, I think we've got some positive economic data. We'll talk about that as well. But this is quite the streak.
It really is. Again, 2 weeks ago, if you listen to the old podcast, the one podcast we did 2 weeks ago, we had Barry and Grant on. That was a live stream that we did, that we had, I think, over almost 40,000 people join that live stream while we did it 2 weeks ago. And we laid out a lot of different things that, listen, no one truly knows how bad the yen carry trade could be, but we pointed out many reasons to think that, listen, this is not going to become a recession. This is not going to become a bear market. Now, maybe there's still going to be a recession somewhere down the road. We're going to talk about why that was delayed. And S&P, like we said, is up 8 days in a row. As time we're recording this, only 1% from all-time highs. It's truly kind of amazing, I think. I guess my take, my buddy Joe Fami hung out with Joe recently, and he was on let's see here, the Compound of Friends with Josh and Michael Batnick and JC Peretz. But maybe 2 weeks ago they joined, and it was just Joe pointed out just how quickly sentiment changes. Right, this time 4 weeks ago, you look at put to call ratios, quite complacent. You look at newsletter writers, most bullish they've been in years and years. 2 weeks later, the biggest drop in bulls in these news writers that we've seen since after the 87 crash. Put to call ratios have spiked significantly. I mean, it's just amazing. And now here we are with this long win streak, and I bet people are going to get complacent again. I mean, I've done this a long time. I don't used to take, I don't know, long. I'll just put it this way: it used to take longer for people to get worried. Now it's like overnight. I think it is because we're so connected. Couple Sundays ago, we're looking at our phone. World War III is trending. You've got Japan crashing. You got U.S. futures crashing. Yeah. I mean, everyone's talking about Black Monday was trending. The emotions swing a lot faster than I've ever seen before. Do you agree there?
No, I think if we just take the VIX, for example, the fear index, right? Yeah. VIX basically measures what option traders expect S&P 500 volatility to be over the next 30 days, right? So, and usually when fear goes up, the VIX goes higher. This time the VIX went up to like 75. This is pre-market. I don't know if it was tradable per se, but it came back down really quickly. We're back to below 20 levels. And that's what's surprising, right? Like, yes, VIX goes down 75, and it's a good bet. I mean, it's not a recommendation or anything, that it's going to go down after that, right? But it settles on 30, 35, maybe 25, 30, but it's below 20 again. We're back to normal. But I think we've gotten some data. We've gotten good data in the meantime. I think that was, I'll put it this way. I think before, to your point about complacency, a month ago, people are like, oh, we are definitely getting a soft landing. No recession. Right. I mean, you have your usual bears saying recession. So set those aside. Don't listen to those people, guys. Right? But I think let's say the probability, the market is pricing a probability of recession around maybe 5%. Then we got that payroll report a couple of weeks ago, a little over a couple of weeks ago. Then everyone is like, we got initial claims data, unemployment benefit claims. That jumped to about 250,000. Right. And I think suddenly the probability of a recession maybe went up from 5% to 25%. And now over the last 2 weeks, we've gotten better data. We'll talk about that. And I think that recession probably, I don't think it's gone back all the way down to 5%, but maybe to 15% or something like that. So the market's, I think not freaking out anymore, I should say.
No, well said. The VIX is interesting. JC Pretz at All-Star Charts noted this. I liked it because he talked about the idea no one really traded the VIX that high. If you look at VIX futures, right, the spot VIX was way up over 60, but the VIX futures, the highest they got a couple Mondays ago was like 45 or so, which kind of makes sense because keep it simple. If the VIX is at 16, that's a 1% expected move up or down. If it's 32, 2%. You don't do it again, you're talking mid-40s, give or take, upper 40s, I guess. You're talking 3% moves. So that kind of makes sense. But it's still an incredible VIX spike. But again, the VIX, I mean, like you said, it was beneath 30, hit intraday above 60, and then close beneath 30 the next day. So below 30, above 60, below 30. That's never happened before. So we talked about this before, but just truly amazing. Now, Sonu, let me, I've got some, I don't know. Ready for story time, I guess?
Let's see here. Let's see here.
So I did a bunch of stuff, and there should be a blog on this, carsongroup.com/research. But as the time we're recording this, S&P's up 8 days in a row. If it's higher on Tuesday, that'd be 9. If my math is right, that'd be the longest win streak in 20 years. For the S&P 500.
That would take us to 2004, right?
Yes, November 2004. Think about what you're doing then, November. You thought you were probably going to be working on race cars back in November of 2004,
right?
Or
I think so. Actually, that was a good time. That was a year before I even started doing any finance work, really. Mm-hmm. So it's been about 18 plus 19 years since I just started doing work with finance. But yeah, 2004, November, I had no inkling. Yeah. I thought my future was at San Diego or Lawrence Livermore or Boeing or Lockheed or something. Yeah. And here I am with you.
Here we are.
I'll pick this over anything else.
This is more fun. I mean, I was thinking you went to Purdue. What years were you at Purdue? When did you go to Purdue? Was Drew Brees there? That's all I'm getting at. Drew Brees, was he there when you were there?
2000, 2001. So
some good years.
Rose Bowl.
There we go.
So that was my introduction to American football.
And Purdue, no offense, Purdue, they haven't been very good ever since. But you picked the right time to be there with Drew Brees. Anyway, all right, so 8-day win streak. I just found some of the recent years that actually had an 8-day win streak, Sonu. Last 4 times. 2013, for the year, stocks up almost 30%. 2017, stocks up 20%. 2019, stocks up 29%. And 2021 gained about 27%. When I say stocks, that's the S&P 500. So just real simply, when you have 8-day win streaks, they tend to happen in bull markets. People have been calling this a bear market rally. I think they've kind of given up on that. But initially they were calling it a bear market rally, a bear market rally. You, honest to goodness, do not see long win streaks, consistent win streaks like this, Sonu, when you're in a bear market. But what's also fascinating, we saw some big gains. During the 7-day win streak, stocks were up like almost 7%, 6.9, close enough for government work. That's really rare. I mean, I found only 33 times, or, well, let's make sure I read this correctly here. I've got this couple. There it is. The last time we gained close to 7% over a 7-day win streak was March of 2003. That was the Iraq War when that started. Mm-hmm. That was when the bear market ended, and stocks took off up, got it here, 27% a year later. The two previous times it had a 7-day win streak with a blast of strength like that was late 98. Let's see, late 98, and before that was October and November of 98. October and November of 98, those two times. So again, pretty good times, and times after volatility was over and the bull market kind of came back is a good way to put it here. One more on this. Let's see here. So last week was the best week of the year, up 4%. We had a perfect week where all 5 days of the week are higher. I found 36 episodes of a perfect week, but also up 3.5%. So usually when you have these long win streaks, like we just saw, they're not always up that much. It's usually slow and steady. Right. Bull markets this was a little rare. We had a really strong win streak, but really good gain. So when you have a perfect week, up at least 3.5%. The last 2 times we saw that, pretty small sample size, but it goes back a minute here. February of 21 and November of 23. 6 months after those 2 periods, up 19% and up 14%. So again, a lot of numbers here. But what we just saw, Sonu, does not appear to be bearish. One final one, just looking at 8-day win streaks, right? I counted, this is the 54th. This is the 54th 8-day win streak since 1950. Looking at future returns, they're pretty much right about average. They're right about normal. Okay. 6 months later, 5%
and
average.
Pretty good, right?
Well, that's what I'm going to say here, because a lot of people tell us these long win streaks are bearish. These long win streaks are bearish. No, 8-day win streaks don't appear to be bearish at all. 1 and 3 months about average, but 6 months later, 5% of the average. 12 months later, 9.3. Higher about 79% of the time 6 months later, but 73% of the time a year later. So 9.3 a year later and 7.3, 73% of the time higher a year later is like your average year. But I guess the key thing is it's not bearish, okay? This blast of strength that we've seen with other data that we've supported, I think a good chance we're up more than double digits this time in 1 year if you look at a lot of the things we follow. But I think it's just so important to have that context, because so many of the same bears, so many of the same people that have been telling us the same thing the whole time. This whole bull market that started 22, 23 months ago, are still saying the same thing. They got a lot of airtime 2 weeks ago, and here we are. You're flirting with all-time highs. So I said a lot there, Sonu. How about this? I'll put the ball on the tee. Let's talk about earnings. We had a pullback, but what have earnings been doing to justify things?
The same thing they were doing last month, the same thing they've been doing for the last 6 months, last 12 months. They've just been going up. Next 12-month earnings, which is a good way, because markets look forward, right? They're not looking backwards. Yes, it's important to see what came, but throughout earnings season, it's the same story we saw last earnings season. Even a year ago, I guess about 15 months ago, April of 2023, after the Silicon Valley Bank crisis, we saw a big jump in next 12-month earnings. That's continued. Right now, S&P 500 next 12-month earnings is sitting about $264 a share. And, for context, at the beginning of the year, we were well below, 250, 245, somewhere around there, right? So you've seen a nice pickup in earnings expectations. And remember, the market runs on forward-looking expectations. So it's a good sign that's gone up. Even during earnings season, here's the thing. I mean, I think there's been a narrative that, the consumer is, weakening and the consumer health is deteriorating. But I think Goldman does this nicely. They quantify, earnings calls data, and 3 things, right? Sentiment around the consumer has actually been improving. Sales growth at consumer-facing companies slowed down, which is not surprising given nominal GDP growth has gone from 7-8% to 5%. But, these companies are still, sales growth is still healthy. And then 3, real income growth. So income growth after adjusting for inflation is solidly positive across all income groups, right? So I think, earnings season, to put it mild, long story short, has been pretty good. Companies are not talking about recessions either.
Well, yes, there's been some data on that. If you look at how many times the word recession is mentioned at an earnings call, this most recent second quarter earnings, it's like the lowest we've seen in years, right? There's no uptick in the word recession. So that's just maybe more of an anecdotal way. But if companies aren't talking about recessions, maybe we're not necessarily going to go in one. Just a couple more comments on, I guess, equity markets here. It is, you could say, maybe somewhat concerning that we see like 52-week highs coming in at utilities, coming in at real estate's been doing well, staples doing well. There are some more defensive areas that are doing well. But here's the flip side of that, Sonu. It's not like they're the only groups, okay? Literally last week on a weekly closing basis, financials and industrials also closed at highs, okay? The Dow closed like an all-time high, I believe, on a weekly basis. So the bottom line is there's a lot of groups participating. NVIDIA, right? I mean, I fit the stats. It was down 30%. They just gained like 30%. I mean, it's not that far from an all-time high. I mean, tech has come roaring back as well. But the bottom line, again, is, yeah, some of these defensive things are doing well, but go back and look at history. Go back and look at bull markets. You know what tends to happen in bull markets? Most stocks go up. That's how this works, is what we've been saying for a long time now. It was never about 7 stocks. They lied to you. I hate to tell you this. They lied to you. It was never about 7 stocks. We push back on that continually, saying, listen.
By the way, all 11 sectors are green this year.
Yeah. Yeah, well said. All 11 sectors are green, so that tells you there's broad-based participation. Yes, some are up more, but again, it was never about just 7 stocks. There were a lot of stocks going up under the surface. It's just those 7 were up so much, and everyone ran with the S&P's up 20%, and the 7 biggest stocks count for 90% of it. Okay, I guess so, but look under the surface. It was never about 7 stocks. There were a lot of other stocks doing well, and when we see industrials, financials doing well, mid-caps and small caps all of a sudden have started to perform well, believe me, those small caps outright crashed. It felt like, they had that big rally on the CPI data, then crashed on the Japanese data, but all of a sudden small caps are quietly coming back. Mid caps are good. It's a broad-based bull market. That doesn't mean it has to go up every day. You're going to have 8.5% mild pullbacks, mild corrections like we just had a couple weeks ago. It happens. Here's a disclaimer. Might have another one ahead of the election. September, October aren't always that great. So we bounce back up to close all-time highs. Maybe we have a little more indigestion. Perfectly normal this time of year. What do you want to add there, Sonu?
No, and to your point, I was just pulling up the numbers. So the S&P 500 closed at a record high on July 16th.
Yep, July 16th.
Since then, it's down now after all this stuff, right? VIX going up to 60, 65, 70, whatever it is. And this win streak of 8 days, maybe 9 days if today's positive, the S&P 500 is down less than 1%. But during that time, to your point, utilities are up 7%.
Okay.
Real estate is up 3.7%, right? And which shouldn't be surprising because bonds are up, yields fell. But financials are up just under 1%, right? So financials have hung in there pretty well. In fact, done much better. Yeah. Industrials have outperformed the broad index as well, to your point. Mid-cap stocks, remember I said the S&P 500 is down 0.9%. Mid-caps are down about 0.5%. So they've actually done slightly better, right? Small caps have, are down just over 4%. But you take the other side, value stocks, right? Not quite growth stocks. They're actually up. I mean, financials are a big part of value stocks. They're up 0.5% since July 16th, since the S&P hit its record. So, there's some rotation happening in the middle of all this as well. We've talked about that last month before this mini sort of, I don't want to call it crash, this correction or, pullback. Yeah. Probably not a correction. It didn't even hit 10%, 8%, right? So, I think going back to your point about there's some broad-based strength here. It's not just a few stocks.
Yeah, you look at financials, right? Not a recommendation, but Berkshire Hathaway is like an all-time high as we sit here and talk. I mean, that's a large. Now, is that a pure financial company? Probably not. I mean, you got to put them somewhere, but they are the largest component of the financial index, the XLF. So, if the largest components making new highs, that's probably not the worst thing. I don't know. You want to talk about the economy? Let's see what time it is. So we've gone about halfway. We probably need to start talking about the economy and wrap this up in 15 minutes.
Actually, I'll connect that to markets too. Like we said, since August 5th, so a couple of weeks ago, the market's up about 8%. But usually, to your point about, you were talking about usually with these win streaks, the market goes up small amounts. It's not up a lot, right? But 8% in, 2.5 weeks, that's a lot. But what's interesting is it's come on the back of these days where we had big gains. And those gains came on days when we got good economic data.
Yes.
Right? So on August
good news
8th,
is good news. Back
there
to
you
that
go.
world.
Good, yeah, good news is good news. How about that, right? But no, we talked about unemployment claims, unemployment benefit claims jumping to 250,000. The market had a mini panic about that, and then the payroll report sort of underlined that with the unemployment rate going to 4.3%. But on August 8th, we got claims data. Claims pulled back to about 235,000 or something like that. The market rallied 2.3%. Then the last week, it was Monday, I believe, we got PPI, the producer price index. It actually came out a day ahead of CPI. It was soft. I mean, same story. Inflation is last year's problem. You and I have talked about it. We won't spend too much time there. Market rallied 1.7%, right? So there's good news of like, oh, the Fed needs to cut like yesterday. And then 3 days later, on Thursday, we get, again, another good unemployment benefit claims report. Retail sales much, much better than expected. The market rallies 1.6%. So, I mean, yeah, we've got the market really moving on individual data points. But yeah, like you said, good news is good news.
Yeah, I think I saw that it was like the best reaction to a retail sales day in at least a year. Because normally retail sales, yeah, we watch it. I mean, I think I made a comment last week. I'm not crazy about the idea that we rallied 2 Thursdays ago because the claims number, like we're focusing that much on claims, but we are. But again, like you've pointed out, there are some things taking place in claims, weather, seasonal, some different things that schools. I mean, certain states tend to always have more claims that tend to happen, and then they tend to come back, and we think that's coming back. I do want to dig into something here. Our friend Raphael's his first name, Raphael Bostic, literally right before the CPI data said, quote unquote, he needs more information before cuts. Like 24 hours later, he's like, I'm worried we're behind the curve. I'm worried we should start cutting. And I looked at it 3 times. I said, nah, like, in a world, what did we just talk about with Danny? The world of deep fakes, the world of this, the world. I said, nah, he couldn't have just changed his tune.
But he did.
He did, Sonu. I mean, this guy was so worried about everything, and then he got one data point from CPI when you and I have been pounding the table for months that inflation is last year's problem. How is this? I don't even know how this is possible. What's your take on the way he changed his tune? I mean, that's scary. To be honest, he's a big name at the Fed. I mean, you shouldn't be changing your tune that much on one data point because this data was smacking you in the face that inflation was last year's problem. Well, talk about Bostic there and his 180.
I mean, I thought it was bad enough that they got head faked by the harder than expected Q1 inflation data.
Which you talked about literally every week on this podcast. It was not the start of more inflation. Yeah.
And then we got April, May, and June, and now July. Because July came out before Bostic made his comment. But yeah, no, he was like, earlier in that week, on Monday, I believe, in the Financial Times or wherever it was, he was like, oh, I don't think there's a need to lower rates in September. We could wait till December. It wasn't even like we will wait till December. We could wait, which means he was entertaining the thought of not having any rate cuts this year. And then CPI comes out and suddenly he's like, oh, I'm now open to moving before Q4, which is September.
We might be behind the curve. He kind of hinted at that. Yeah. Like, we better move sooner. We're behind the curve. I mean,
can't really afford to be late. We have to act as soon as possible. Waiting does bring risk. I mean, like, come on. I mean,
oh my goodness. I mean, I'm sure I've changed I'm sure someone could find me changing my tune.
Oh, sure,
I've done it for 20 years. But I mean, come on. Like, that's a big one.
Come on. These guys have so much of research staff. I mean, much more than you and I. You know what?
You and I do this.
Excel
we exactly.
We listen to good folks like the folks from Employ America, Neil Dada, and Skanda Amarnath.
Why don't you do a little promo for Friday if you want? Speaking of,
all right,
yeah, might as well, right?
Yeah, and Friday. Then I think coming back to the Fed, Raphael Bostic. I think all eyes will be on Powell. Powell will move the Fed in whatever direction he wants to move it to. And the next big speech he's giving is in Jackson Hole on Friday morning at 8 a.m. Good news for everyone listening. This episode will be out tomorrow, right? Wednesday, yes.
Wednesday, this should be. Yep.
So
if you listen to it early, if you listen to it over the weekend, you're too late. But anyway, go ahead.
Yes, but you can probably still find it on Ryan's Twitter.
Oh, yeah.
We're hosting X. I still call it Twitter. Ryan's hosting an X Spaces. We do one almost pretty much every Friday. Last month, I think we've fallen off the wagon because of my schedule. And you've been traveling.
You were busy. I was getting massages, and you were traveling. So anyway,
yes, there you go. So we'll have spaces at 8:15 a.m. Central Time, 9:15 a.m. Eastern. We're going to have Skanda Amarnath from Employ America. More than anyone else, I think over the last 2 years, no, probably not even 2 years, 3-4 years, they've nailed the cycle. right? In terms of their inflation call-outs, recession call-outs, which they didn't expect a recession, manufacturing, productivity, all of that stuff. They've been fantastic. We're going to have the head of Employ America, Skanda Amarnath, to join us and talk about Powell's comments at Jackson Hole.
Yeah, and like Sonu just said, you can sign up for that on either of our Twitter feeds. We'll share those links. You're probably on Wednesday or Thursday. Probably better do it Wednesday now when people are listening to this, which is fine. But the replay will be there too. So Skanda's really awesome. I've been reading his stuff for a while, and Sonu's reading it for a long time. So we're excited about that. So as I bounce around, look at my notes. A small business, the NFIB, National Federation. I'm not sure.
Independent businesses.
Independent business. Yeah, that's close enough. We just know it's the NFI. It comes out once a month. I could be wrong. Yeah, it's the Small Business Optimism Index, right? Sonu, that had a big jump. The highest since February of 22. Now, I'll be honest, a lot of this, they say, can be potentially political.
I think so, yeah.
But at the same time, small businesses, I've made this comment before, I'd rather follow what the small businesses are saying than just about any economist. Maybe not Skanda, maybe not Neil Dutta, but there's some economists I listen to you. But for the most part, if small businesses are optimistic or bearish for that matter, they tend to have a really good pulse of what's going on. So that's just another bullet point to me that, what did I say? Highest since February 22. Yeah, that optimism on small business, highest since February 22. That doesn't feel like a recession's coming around. What do you think?
No, absolutely. And to that point, there's, as part of that survey, they asked these small business, owners, what's your single most important problem, right? Not surprisingly, it's still kind of inflation, but it's much lower. Like back in the middle of 2022, 35% of them said inflation's the largest problem. Right now, it's 25%. But the next biggest problem is quality of labor, right? And I don't mean to deny small businesses, their experience, anything like that. Like labor is hard to find, sure. But, especially because if you have to pay more for labor, I mean, that's why small business probably like, I don't want to pay, X dollars for labor. I have, I can pay only, X minus something. And so it's hard to find good labor, right? So when things are going well, labor is usually the single most important problem. But one thing I look at is sales. How many of them are saying sales are the single most important problem? Only 8%.
Wow.
Are saying sales are the most important problem. Back in middle of COVID, it obviously jumped. There were about 20% of them saying sales are the most important problem. 2008, 2009, even 2010, 30 to 35% of these small business owners were saying sales are the most important problem. So that's what you're looking at when you talk about, okay, are these folks seeing a recession or not, right? If their biggest problem is quality of labor, that means labor is hard to find. That means, the labor market is fairly healthy. And the reason they're saying quality of labor is the single biggest problem is that they don't want to pay more and hurt their margins, right? Again, that's not the worst problem as far as you and I are concerned when things are, when we're looking at it. For them, it's a problem because they're like, oh, we want cheaper labor, but it's not available, right? But yeah, I think the fact that not many of them are complaining about sales, that's a good sign.
Great stuff there. So we've talked about the positive inflation data, retail data show the consumer still, there's some cracks, yes, but the consumer is still healthy. Let's maybe end it here in the next 5 minutes, again, with Jackson Hole, right? I mean, obviously it's a huge event. I believe Friday morning, the, what is it, his transcript or his statement maybe
I think we get the transcript
right?
Before 8 a.m.
Yes,
and he's going to speak. It's usually just 10 minutes or something, I think, right? 10, 12 minutes. It's not even very long. He's done in a few minutes.
I'm not sure. Well, okay, that's interesting. I wasn't 100% sure that. I just know you go back in history. I mean, some of the QEs have been announced here. 22 became off extremely hawkish. Market collapsed after 22. Now, there have been some years that, well, maybe nothing really happened, I'll be honest. But this year feels like one of those big ones. It feels like one that he's probably going to open the door for rate cuts in September, and maybe more rate cuts. I mean, but who knows? Who knows? What are you expecting here, Sonu?
I think some of this is wish casting, what I'm going to say. Because I mean, like, they should have already cut.
True,
but,
true.
Goodness, I'll be shocked if he doesn't set things up for a September rate cut. I think that will just be bearish, period. I mean, not just bearish for the market, obviously, but bearish for the economy, right? Period. But I think on the point about the economy, I'm looking to see, what's this forward guidance? It's not just about 25 basis points in September anymore, right? Are we going to get 3 rate cuts? Are we going to get 75 basis points of cuts, 0.75%, October, November, December, are we going to see that, right?
Mm-hmm.
Is he going to set and then January too? I mean, it's not like January is like next year sounds like a very long time, but that's just a few months away, right? So we could see, are we going to see the federal funds rate go from 5.5% to 4.5% by February 1st, right? Over the next 4 Federal Reserve meetings. I think that's what I'm looking for. Is he going to give any forward guidance relative to that? And that's really going to set things up, I think, for the economy more than anything else. And things like housing, we're seeing housing suffering. Before we get into this negative feedback loop where they're really behind the curve and they got to start cutting by 50 basis point, 0.5%, 0.75%, you don't want to get there. Sure. Like, just do it already, do it quickly, do it early. I mean, like Boston said, we could be behind the curve now. Like, well, hello.
Yeah, no, well said there. So we wanted to go about 30 minutes or so, and we've pretty much gone 30 minutes with part 2 of episode 98, talking about AI with Dani Fava. Anything else you're watching this week? I think we've kind of covered it all. But anything else, Sonu, we should be paying attention to before we sign off?
I think Jackson Hole is a big one. Yeah. I mean, like I said, I mean, there's obviously the politics, election stuff, but you and I have talked about that. Things will be what it is, right? I mean, one way or the other, I think the big story across both candidates is like, we're going to see more deficits. It's not the worst thing for profits, but, you know, it is what it is. Mm-hmm. I think all eyes on the Fed.
Yep. Good point. I tend to agree. Earnings season is you know what? NVIDIA's earnings are next week. Obviously they're kind of the last big name to report. It used to be like Walmart. Once you saw Walmart and Home Depot, you're at the end now. NVIDIA obviously is obviously
the
very
bookend.
Important. So that's I guess next week. So we'll be focusing on that. But that stock has come soaring back, much like just about every stock out there over the past couple of weeks, as we've had a wild ride this August. But as we talked about last week, August tends to be that 1 month where you get these big events that kind of come out of the blue and you get a lot of volatility. And I've said before, this one reminded me a lot of 2015 when China did a surprise yuan devaluation. People forget this at the time, but that August was way more volatile than this one. This one felt awfully volatile, and it was. But we saw the first 1,000-point Dow drop ever, third week of August. I think August 23rd or August 25th. Anyway, we can look it up. Close enough for government work. But that later part of August 2015 and a 1,000-point drop back then was a lot bigger deal than a 1,000-point drop right now. So we're not minimizing what we just went through, but it's important to remember we've been through these things before, and we've always gotten past them, and we didn't think this time was going to be any different. So with all that, everyone, thank you for joining episode 98 of Carson's Facts versus Feelings. Thank you for Dani Fava for joining the first half of this discussion, talking about AI and all the cool things that Carson is doing. And I know she was limited what she could say, because we've got a big conference coming up in 2 weeks, 3 weeks. Excel, where episode 100 will be with Tom Lee. You and I live stream with Tom Lee, which will be great. But Dani's got some really cool things coming out, and I think Carson is on the
edge,
pure edge,
front edge,
front edge, leading, whatever words you want to use here. And that's one of the big reasons we hired her, to make sure that we are, because AI, I don't care what industry you're in, right? If you're not at the forefront of AI, you're probably going to be behind the 8 ball, so to speak, and financial services, advisors, their clients, research in general, how we communicate. All these things are connected with AI, and there's some really cool stuff that Carson's got coming out very, very soon, and we start announcing more and more. So we're really excited about that. So with all that, everybody, thank you for listening. Sonu, thanks for joining on your sabbatical. I mean, you've worked more on a sabbatical than anyone ever. I joked you could never take a sabbatical again after the destruction we saw in the stock market. Then it came back, and I was like, okay, nothing happened. The market was flat while you were gone. I mean, it didn't feel like that. It didn't feel like it, did it? Anyway, all right, everyone, we'll be back next week, 99. Episode 99 will be next week, so that'll be fun. So I think it's just you and I doing a regular one. Then
maybe we have a guest. We have Dr. Kelly from JP Morgan.
Oh my goodness, you're right. That is
wow. Very, very special guest next week.
Boy, thank you for reminding me. Yeah, I'm sorry. Sorry, Dr. Kelly. I'm losing track of what day it is. Yes, we'll have Dr. Kelly from JP Morgan. That'll be an amazing discussion.
Yes.
And then we go. I think we're going to take a week off. I think we're going to take the week off of Labor Day
before episode 100.
Before episode 100, get ready for our big conference down in Florida, Excel. Get ready for that, but lots more stuff coming. All right, everyone, thank you very much. We'll be back next week with Dr. Kelly. Take care. Thank you.
Information provided on Facts versus Feelings with Sonu Varghese and Ryan Detrick are for general information only and are not intended to provide specific advice or recommendations for any individual. The statements and opinions of show guests may not be reflective of CWM LLC, or its affiliates. Past performance is no guarantee of future results. All indices are unmanaged and may not be invested in directly. Investing involves risk, including possible loss of principal. No strategy assures success or protects against loss. To determine what may be appropriate for you, consult with your attorney, accountant, financial or tax advisor prior to investing. Guests on Facts versus Feelings are not affiliated with CWM, LLC.